FIMBank is a specialized trade finance banking institution with a strong background in factoring and forfeiting solutions, with a global presence in various important financial and trading centers. We meet with the bank's CEO, Murali, who discusses the bank's continued progress following its recent announcement of $7.7 million in profit. He also discusses the bank's forthcoming rights issue. Can you describe the FIMBank Group's line of business and its main focus?
Yes, of course. FIMBank is focused on trade finance in a generic sense. Trade finance, as the audience would know, always has shown better growth characteristics than economic growth worldwide, because no matter what the economic cycle, world trade continues to do well, because that's a basic business of buying and selling necessary requirements with a growing population in the world. And FIMBank is focused on trade specifically, not necessarily any of the other parts of banking. And therefore, our focus on trade takes various specialist forms, such as factoring, such as financing commodities, such as working capital financing, and forfeiting. And all that brings together a cross-border focus, because we're not restricted to a country or a geography. We are happy to work with clients wherever they are located, as long as we're able to identify and make sense of their business and conduct the necessary required procedures before we can start work with them. And if they pass those requirements, we're happy to work with any customer that has a trade finance need.
In June 2013, the FIMBank Group underwent acquisition by the KIPCO Group. What was the role of this institution in the progress registered by the bank?
Yes, it was a significant event in the life of FIMBank. Set up in '94 as a result of, shall we say, an invitation to a group of Kuwaiti investors to come set up a bank in Malta. FIMBank continued to be a smallish player on the world trade scene until the early 2000s, when acquisitions started happening. With the acquisition of London Forfeiting Company, FIMBank acquired scale, and LFC today is still one of our most successful subsidiaries. Thereafter, FIMBank went on a spate of acquisitions, buying into or setting up factoring subsidiaries worldwide, and that led it to some distress, resulting in significant and prolonged losses over several years. And it reached a definitional stage of FIMBank's existential capabilities until KIPCO stepped in. So KIPCO's arrival couldn't have been any sooner. And with KIPCO's investment came the expertise of a bigger group, a deeper pocket, and more professional management, none of which I would say functioned as well as KIPCO brought by way of a discipline. So KIPCO's acquisition gave FIMBank a new lease of life and brought to it more professional management, shall we say, and allowed FIMBank to truly pursue its definitional objectives of providing trade finance solutions.
FIMBank recently reported a net profit of $7.7 million for the year ending 2017, following a profit of $5.4 million registered in 2016. What are the salient elements which continue to drive growth and shareholder value?
Of course, that's a great question to ask. Each of these years, there were different drivers. So FIMBank in 2014 made its third year of losses, and it was a spectacular year in the negative sense, given all the reckoning FIMBank had to account for all the investments it had made in prior years. And so, as I said, that was the second year of KIPCO's management, and definitional questions were raised about its fitness for purpose. So 2015 was a bit of a turnaround, but 2016 was the real first profitable year after 3 years of losses. And in 2016, there were a number of one-off actions that we took in order to put on the books some profit, while our real operations were still being fixed. So I used a term in those early days, and that term's caught on. I've seen that repeated a couple of times. It's an old term I used to use at Citi, where I worked for many years. It's flying the plane while fixing the engine. So we had to keep the plane flying while we had to fix the engines. We were mostly operating on some strong wind currents in our favor. And that's what accounted for 16. That's how we made such a modest profit of 5.4. But in 17 is when truly the cleanup came of age, and we were able to bring to maturity many of our operations that had been undercapacitized and didn't have the right leadership. And so in 17, we had very few one-off sources of revenue. I can say 17 was a true reflection of what we are able to do, and we are hoping to repeat that on a much bigger scale now.
FIMBank has launched a digital banking system aimed at catering for the various needs of its corporate customers. Can you elaborate further on the FIMBank Direct platform?
Thank you. Yes, FIMBank Direct is a self-service tool on the web that is used by all our clients, corporate or retail, the ones that hold retail deposits with us, to transact their positions with us. So they could be making payments out of their accounts with us, they could be viewing the status of their time deposits with us, or they could be arranging for transfers from other sources to replenish bank balances they hold with us. And soon we expect to introduce capabilities to allow clients to issue letters of credit or to look at inward transactions coming their way under trade finance. So a comprehensive self-service tool that was created on the most contemporary principles of security that keeps us safe. Today, it's no secret that front-end self-service tools like these are present in every bank. What differentiates them is the level of security they provide while still being user-friendly. So if the front door is easy to get through, then that self-service tool is a huge liability, and we have taken extra precautions to make sure that that is one of the most secured interfaces available to clients. And so as long as that doesn't interfere with the user experience overall, which we have tested and has been found to be the case, we're happy to add more features to it. So it's a stable platform. We've got good client reviews to it. We're even able to interface it with client enterprise systems in the case of larger clients that have larger volumes of operations. So the user interface does not have to be keyed in.
FIMBank recently announced a rights issue that will raise a total of approximately $115 million US. What's the purpose for this rights issue?
Yes, FIMBank has had, since FIMBank's located in the European Union and is regulated by the European Central Bank, our regulatory requirements are no different than the other banks located here. And there are capital requirements to be met, as well as liquidity requirements to be met, all of which have been in the past met, but as a result of new requirements, FIMBank has had to raise some capital. And some of this proceeds of the rights issue will go towards meeting our regulatory commitments in the frame that we have agreed with our regulators, which for us is the MFSA, because we're not yet significant enough to be directly regulated by the ECB. The remainder of this rights issue, so it's about 2/3 and 1/3 roughly, would go towards assisting growing our balance sheet further. In our business, profitability and scale is the key towards better returns on our shareholder money and also better performance over a sustained period of time. Since we are in a credit business, we expect to have a certain proportion, even if it's a very small proportion, of credit losses. And therefore, as we build scale, we create the buffer required to manage these kinds of losses. And that can only come with growth, and growth comes with capital. So this capital assists us with regulatory ratios to be met and allows us to grow.
Finally, what are your expectations for FIMBank in 2018 and beyond?
2018 is a defining year for us because this is when our shareholders have committed capital after years of taking losses and 2 years of watching our performance. Our shareholders have voted to put more capital, which is a great vote of confidence. And I was in Kuwait recently and met our shareholders at the highest level and had a business review with them, which was received very well. So the mood is positive. Having said that, you never let a good deed go unpunished. So with more capital comes greater performance pressures. And more capital means less return on the capital for the same level of revenues. And it's no secret that the best returns are not in the single-digit range. So we need to run much faster to stay where we are, which is a good problem to have. So we have a very good business model which has been tested and thoroughly scrubbed clean over the last several years. Now it's time to grow. Growth which has been withheld for the past 2 years. So we're all excited, looking forward to a year of growth, several years of growth with the capital and returning better returns on the capital to our shareholders.
Thank you very much.
Thank you.